30 points higher on the Nifty. The sensex is up about 80 odd points.
The Nifty today is above the 17,750 mark.
We have Nifty, which is sitting at the day's high, 80 points higher on that one right now.
Eighth consecutive day of gains. It's up 0.5% on the benchmark indices. Mid-caps don't want to be left behind. Mid-caps moving in step with the frontliners. The advanced decline ratio firmly in favor of the gaining side.
Eighth day, a day where important resistance levels have been taken out. 17,814 is what the board finally says.
What a day it was. Eighth day running, and the Nifty has conquered multiple peaks over the last few trading sessions, including the likes of 17,300, 400, 500. And today, take your breath away, it was 17,800 on the index. Let's see where we go from here, whether we run the risk of running into resistances or not. But let's talk about markets today, a show where we track about 6 hours of trading action in 5 headlines. Let's talk about those headlines then. The first one, of course, is the market, because the Sensex and the Nifty gained for the 8th straight session. The pharmaceutical and financial stocks led the rally with gains. Mid-caps marginally outperformed the blue chips. Expectations of improvement in the fourth quarter margins owing to a decline in input costs propelled pharmaceutical stocks higher. Divi's Labs, export recovery and strong brokerage commentary on Biocon helped these two stocks lead the pack. Divi's ended 10% higher. Stocks of sugar mills shine as the prices of raw sugar hits an 11-year high. This as unseasonal rains in India and lower supplies from other producing nations fuel prices. And in mid-caps making news, strong fourth quarter updates power Sula Vineyards and Purvankara ahead, while a mega order buoys BHEL anti-tanker wagons. India Inc., however, is cautious about global growth but bullish on the domestic market. Industrialists KM Birla, TV Narendran, Venu Srinivasan and Sanjeev Bajaj say the global economy remains fragile, but India will continue on its growth path. They expect the focus on infrastructure to keep the economy resilient. So let's talk about some market opinion coming in. Atul Suri of Marathon Trend says that it's a perfect time to identify the leaders of the next bull markets, and he believes that it's the best time to bet on capital goods. They, he believes, would be the leaders of the next bull run. Let's listen in.
These sectors and themes not only make money for you in the short run, but I feel they become very big leaders of the next bull market. And this is a great time to actually do that, transition in your portfolio. Most people are sitting with the leaders of the last bull market. Every bull market throws new leadership. And in such times where there is no massive price moves, I think it's an excellent time to, churn. If you churn, I guess the next phase is favorable, or that's where you get outperformance. If you don't, you will say that, okay, the market's going up, but my portfolio is not going up. So even among cap goods engineering, it's a very big segment. You'll find that electrical equipments, right? Now, you'll have to actually figure out, now, what is that? That's something very simple. Anyone can do. But you'll find that even in that, electric equipments is something that's doing very good. Okay. Then engineering per se, as a sector. Remember, all cap goods is not engineering. If you take the subset of engineering, you will find that that also is doing very well. So you'll find that there are some themes, but the important part is that most of these themes are pointing towards the industrials.
All right, let's talk about the second headline now, but the biggest gainers, the pharmaceutical stocks in the pink of health today, as decline in input cost increase expectations of improved margins in the fourth quarter. Divi's Labs led the pack in how almost 10% gains today, and it's a nifty stock that we're talking about after data for March shows that recovery in exports is something that may propel the stock and its business prospects going forward. Ekta joins in with the details of Divi's Labs and also Biocon. Ekta.
The company is really reacting to export data ex-molnupiravir for March, which has shown a recovery, and is a piece of data which is followed very closely in terms of the sell-side analysts in the past couple of months. So it is indicative of the fact that in March 2023, they generated around $92 million in terms of export data versus around $70 million year on year. This is the highest that we've seen since Jan 2021 and is higher than the run rate of around $50 to $60 million that we've seen in the past couple of months. Now, the key point is that there is a bump up which is likely by higher custom synthesis sales. Supplies of an API drug which is basically to Novartis, which is used for heart failure, and that could have contributed as much as $15 to $17 million in the month of March. Remember that March generally could be one-off data. We could see a push due to year-end sales, so one needs to see whether or not it is sustainable. But despite it being lumpy, it is indicative of the fact that maybe there could be a recovery which is taking place in Divi's sales X of molnupiravir. Remember, the stock has also fallen quite sharply, over 30% from its 52-week high. At one point in time, it was really a darling of all of the investors, especially during COVID-19, and that possible interest is now coming back. There is also, remember, their margins, which the street will watch quite closely. In Q3, it had fallen quite sharply, so a Q-on-Q recovery and sustainability of the margins is something that the street would watch quite closely. Well, yes, for Biocon, there are two brokerage notes which have really aided sentiment today. So I'll start with BofA, which has a buy, but they've cut the target price to 330 versus 390. According to them, the risk-reward seems favorable at current levels. The concerns of a biosimilar market being like a generics market is also unwarranted. This other note on Biocon is by Bernstein, which has an outperform rating, target price of 299. There are some highlights from a webinar which was held with the Biocon Biologics leadership team. This includes that the Viatris deal is to play the long-term biosimilars market. Integration did not require much rationalization. Management is looking to raise funds, but with the right partner at the right time. Further stake sale in Syngene is not in the mix right now. They are hopeful of launching key drugs such as insulin aspart by FY24. And the management, interestingly, is rethinking and redrawing contours of the tie-up that they have with Serum. So that is something that the street would watch out for as well.
All right, from medicines, we move on to sugar, because that's the third headline today. Sugar mills, in fact, sugar stocks shown today as the price of raw sugar hits an 11-year high. This is on account of unseasonal rains in India and lower supplies from other producing nations as well. All of that fueled prices in the sugar market for the raw sugar itself, and as a result of which, those who produce sugar, the likes of Sri Renuka, Dwarikesh and Dhampur, all of them were higher. For more details, we have Surbhi with us. Surbhi.
Sugar prices in India have risen by approximately 7% in the past 3 weeks, and there are indications that they will continue to increase. Now, this price surge is driven by a combination of factors, including lower inventories and stronger demand. One of the primary reasons for the increase in the sugar prices is the fall in production. Additionally, the peak summer season has added to the increased demand for sugar, driving prices even higher. Another factor contributing to the price rise is the recent trend of ethanol production. Now, with a rise in ethanol production, sugar supply is being diverted to ethanol production, driving the prices even higher.
TCS reported its numbers for the fourth quarter after market hours. Rima Tendulkar joins by with all the details of the company's performance. Rima.
TCS misses the mark on revenues and margins in Q4. Constant currency revenue growth of 0.6% is lower than consensus expectations of 1%. Margins are flat at 24.5% versus the company's guidance of margins of 25%. The management in the press conference said that the client sentiment weakened in the month of February and March, impacting the revenues and margins. And while budgets are not being cut, there are no large-scale project cancellations. Discretionary projects are being put on hold, and the client sentiment appears to have weakened marginally. So there is a miss on revenues and margins this time, and that's a bit disappointing. And even the near-term visibility, particularly in North America, appears to be a bit clouded. Internals, BFSI growth has slowed down to 9.1%, so that's a bit of a disappointment. Retail continues to hold up well. The order book has been very strong at $10 billion. In fact, the company has clocked in the highest number of large deals this quarter. So the order book is holding up very, very well. Attrition continues to tick lower, 120 basis points down on a quarter-on-quarter basis, while the hiring number has been fairly muted. About 800 employees have been added on a quarter-on-quarter basis. K. Krithivasan will take over as the CEO and MD from 1st of June.
And in macro news, inflation data was released after market hours. Lata Venkatesh joins in with her editorial take on the same.
Yes, inflation is not only in line with market expectation, the big relief is it's way below the 6% threshold, which the MPC is, mandated to keep inflation below. So 5.66 that way is a big relief for RBI and MPC, considering that they have paused. The reasons are not are not a mystery. After all, there was a base effect. March of 2022, prices had gone through the roof, food, edible oils and cereals and wheat because of the Ukraine war. So base effect was anyway going to bring the inflation down. The additional cause of relief for the Reserve Bank and the country is that cereals are down. That was the big fear, that because of the heat wave or the unseasonal rains, whether the cereal prices would go up. The fact that they've gone down month on month is a big relief. For edible oils were always expected to be lower. That's another factor pulling it down. Perhaps the only fly in the ointment is milk prices. They are up 0.6% month on month, but that was on expected lines. Pulses are also higher. So really there is a protein inflation element for sure. The bigger relief is that core inflation is down to 5.8. RBI has been repeatedly pointing out to the persistent core. So this will again come as a relief. Overall, it kind of vindicates the Reserve Bank stand that maybe we should pause and look ahead. Now the expectation is that both in April and May, inflation will fall below the 5% mark also. It will be 4 point something because of a huge base effect. April of 2022 was 7.79% inflation. So we will definitely get a base that will push the inflation closer to the 4% mark. So unlikely the Reserve Bank is going to raise rates in the June meeting. So clearly it looks like the peak of the current cycle has been reached, at least as of now. A word on the IIP number, it's a good number, 5.6%. It is on expected lines, but what is important to note is it is investment heavy. Infrastructure and capital goods are the two elements that have done very well, including power. And the ones that have not done very well are consumer durables and even consumer non-durables. Although it shows a growth, it's a very low base, so we shouldn't be impressed. Consumption is still weak, you will have to admit. That perhaps is the only disturbing element in the macroeconomic numbers.
All right, with that, let's take a short break. Come back on the other side. We'll discuss all the other stocks that are making headlines.
तो जब तक चैंपियन बनेगा ना, इसका रंग उतर जाएगा। रंग उतरा? ये रंग तो वैसे भी उतरने वाला नहीं था।
बारिश, धूप और धूल से आपके घर को सालों साल बचाए। ड्यूलक्स वेदरशील्ड पावर फ्लेक्स, घर का चैंपियन।
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
Let's you and me step out and see how blue the sky, how tall the trees. Let's you and I step out to find how far we go, how deep the sea.
With a 5-star global NCAP rating, Škoda Kushaq and Slavia are India's safest family cars.
Welcome back. You're still watching us here on Markets Today. We've spoken about the pharmaceutical stocks, the sugar stocks, and the markets on the whole, and they're pretty sweet today. 17,800 on the Nifty. So let's talk about something else. We have wine on our minds. Sula Vineyard surged over 9% in trade after the company witnessed a 15% jump in their own brand sales in the fourth quarter. This is the quarterly update that the company gave us. And Surabhi joins us back after the break and is standing by with the details on that one. Surabhi.
Sula Vineyards is surging in trade today, and that is because they've released their Q4 sales numbers, and for a seasonally weak quarter, the sales numbers are pretty strong. Their own brand sales has seen a sales growth of 15% in Q4 and a 26% growth on a year-on-year basis for FY23. Their wine tourism business has seen a growth of 18% in Q4 and 30% for FY23. With this, in FY23, they have reported the highest ever annual sales. The own brand sales is a little short of 500 crores, and the wine tourism revenue has clocked in at 45 crores. The growth in revenue is largely driven by premiumization. The elite and the premium brand sales contributed to 52% of their total sales versus 46% in the pre-pandemic times. And the company also expects the wine tourism to be 100 crores for FY24.
All right, so a lot of wine drinking happened in the fourth quarter, and that's reflected in the kind of up move that we saw in Sula Vineyards as well. But that wasn't the only mid-cap in focus. Purvankara also was up over 2% in today's trading session after the company reported strong business updates. In fact, the company reported its highest ever annual and quarterly sales in FY23 and the fourth quarter. We spoke with the management. The CEO Abhishek Kapoor said that despite RBI rate hikes, business is as usual. In fact, the RBI rate pause is a positive for the industry. And he also said that they're only constrained by supply and not demand, because demand looks good.
No impact of the rate hikes. In fact, this pause is only a positive, for the sentiment for the home buyers, because now people can comfortably take the decision, and there is an expectation, in fact, that this will continue to hold, which we are also hopeful, and I think it's a very, very positive development. The brand and the market both are supporting. Of course, the brand is really, we have made a lot of structural changes. But coming back to the point, the demand has been cutting across all businesses, which means Purvankara, Provident and Purvaland, all three businesses have done very, very well. As a business, we are looking at launching 14 million square foot in next financial year, which is starting April to the next March, right? We already launched 6 million square foot last year. The total value that will get top line potentially, which will be on the floor by the end of next financial year, including the 6 million and the 14 million, which is about 20 million square foot, which will be on the floor, will be almost 15,000 crores over and above the 5,600 crores that you spoke about. So we will be in the market with almost 25,000 crores of inventory.
All right, 25,000 crore worth inventory is what they'll be in the markets with. But another group of stocks that did well were BHEL and Titagarh Wagons, as the consortium of the companies received orders from the Rail Ministry to the tune of almost 80 Vande Bharat train sets worth almost 10,000 crore rupees. The company was declared, remember, the second lowest bidder for 200 train set orders earlier in the last month, and now they've got the orders because they were the second lowest bidder. They got it for 80 train sets. The MD of Titagarh Wagons, Umesh Chaudhary, said that the maintenance revenue will be 1.5 times supply price. So that means that the overall opportunity for the company and the consortium would be close to 25,000 crores.
It is the same tender. It was a tender for 200 trains, and the tender stipulated that the L2 bidder would get 80 trains and the L1 bidder would have gotten 120 trains. So we were the L2 bidders and we got the 80 trains arising out of that. Our share is about 52% to be precise, we're about 52%, and this is on an overall basis. So yes, it is on the supply and the maintenance part of it. Supply portion is about 120 crore per train, and the maintenance that we will get is about 1.5 times, 1.4 to 1.5 times of the supply price. So each year we would get a maintenance. So this is with a 35-year full maintenance contract. All told, we do understand that at least 1,000 trains of Vande Bharat would really come out on track over the next maybe 5-7 years.
And the other stock on our spotlight today was Venus Pipes, hit a fresh 52-week high and seen a good up move this month. What exactly explains this up move and what's fueling this rally? Sonal Bhutra joins in with the details on what's making the stock tick.
That's right. Venus Pipes is the stock that I'm tracking today. Hit a 52-week high. This month itself, the stock is high by 12%. And remember, it's a new listing, listed back in May 2022 itself at an 8% premium and a price of 351 rupees a share. And since then, it has seen a massive move from those levels. Now, the news in this stock is that a reputed investor, Ashish Kacholia, has bought 4 lakh shares, and that is at a price of 750 rupees per share. The seller is Nuvama Wealth Finance Limited, that has sold around 1.38 lakh shares. As I said, it is a newly listed company. So let's talk about what could have been the reason why a marquee investor has put in money in this particular company. The company is a manufacturer of stainless steel pipes and tubes. And if we look at the financials in the last couple of years, it has seen a tremendous improvement. So in FY20, revenues were around 170 crore rupees. It has come up to revenues of around 390 crore rupees. Margins from levels of 7% in FY20 are now at levels of 13%. So that's a big jump, almost doubling of margins from lower levels. Profits too have seen a substantial growth. From 4 crores in FY20, now they stand around 32 crore rupees in FY22 itself. Not only a domestic buyer putting in money here, even FPI share has increased from September to December quarter as well. We are yet to get the March quarter numbers. We have not had the conversation with the company in a long time, but the last time we did speak to them, they sounded very bullish. They said the revenue growth for FY24, FY25 should be at a rate of 40%. They see FY24 EBITDA margins higher by 400 basis points. The current market share is 5%. They have a lot of expansion plans, post which market share could go up to 12 to 15%. Going forward, promoters could also increase their stake in the company, and the export contribution will double to 20%. Right now, it's around 10%. So fundamentally, looks good, and the management commentary is strong as well. Possibly the reason why the stock is in focus.
7% higher on Venus Pipes on the back of a marquee investor entering the stock. But let's move on to the fifth headline today, and this is all about India Inc. because they're cautious about global growth, but bullish on the Indian domestic market itself. And there were a whole host of industrialists we spoke with, K.M. Birla, TV Narendran, Venu Srinivasan and Sanjeev Bajaj. All of them echo the sentiment that the global economy still remains fragile, but India, irrespective, will continue on its growth path. They expect focus on the infrastructure to keep our economy resilient. Let's hear all of them out.
Very clearly, we are in a period of global uncertainty and a fairly extended period, and we still don't see the light at the end of the tunnel. I think in this situation, the significant, I would say, coordination between RBI and the Finance Ministry has put India on a very steady course of stable growth. And we can see that RBI is deftly managing both inflation, which is one of its foremost tasks, but keeping an eye on growth as well. And the rate pause that we saw this time is a welcome signal of that, while keeping in mind that, as RBI has very correctly said, that it will see how things are moving on the ground and decide what to do.
I think, globally, of course, there is some concern because of the fragility of some of the economies. But I think the Indian economy, because of the focus on infrastructure, is looking good. Steel consumption, in my view, should reflect the GDP growth rate. So if we say the GDP is going to grow at 6.5%, 7%, I expect steel consumption to grow at least that. Our growth will be dependent on the capacities that we build. We are in the middle of a 5 million ton expansion, which should be completed during this financial year, but obviously we'll get the benefit of that in the next financial year.
Well, I think we'll continue as a country on our path of growth, which has been very steady in a world of great turmoil and more uncertainty than I've seen in the last 25 years. So I think that's a huge positive for India, and I think as someone from industry, and all of us from industry, I'm sure, feel very proud about it.
Ultimately, we do well when the country does well. All we look to the government is to provide economic growth. And once economic growth comes, I think our industry will do as well as all other industries will.
All right, from the doyens of India Inc., let's talk about the biggest voice that moves the market around the world, the Oracle of Omaha, the man himself, Warren Buffett. He's been speaking exclusively to CNBC, and he believes that the current banking problems are not like 2008. In fact, he also added that some problems seem to have been mismanaged. So let's hear him out, because everyone's listening when Warren Buffett speaks.
So let's talk about what's happening in the banking sector right now. Is this a banking crisis? Is this financials in turmoil? Is this banking crisis 2.0? What would you call what we've been seeing happen?
Well, I would say that some of the dumb things that banks do periodically, have become uncovered during this period. And as one of the banker told me one time, he says, I don't know why we keep looking for new ways to lose money when the old ones are working so well. And they made the same mistake, some banks, in this period by they haven't made as many mistakes. They expect to make some mistakes in making loans, but they haven't and particularly if you're getting into credit card loans. I mean, that's just part of the game. But they haven't made it the same sort of mistakes that they made back in 2008 or 9. But they have mismatched assets and liabilities, and bankers have been tempted to do that forever, and every now and then it bites them in a big way. And it's just amazing to me that banks could make presentations to financial analysts and everything, and if one bank bought a bond at 100 and another bought it at 96, and they both held a maturity. One bank carries it at 100 and another bank carries it at 96. I mean, it is accounting procedures have driven some bankers to do some things that may have helped their current earnings a little bit and caused the recurring temptation to get a little bit bigger spread and report a little more in earnings, and it's entered in a result you could predict. You couldn't predict when it would happen, and then once they start looking at one that does it, then they start looking at others, and pretty soon, that everybody is in a position of looking at a number that nobody looked at when it was presented to them a year ago, if you read the 10K or anything of the sort. But the banks did not call attention to what they were doing when it was going on, and I would read investor contact when they would have meetings with financial analysts or the people who follow banking, and nobody even brought up the point virtually. And believe me, if we've got a $50 billion loss or something in Berkshire, we would expect to.
All right, with the Oracle of Omaha making his comments, we'll wrap up on this edition of Markets Today. Thank you for watching. Stay tuned to CNBC TV 18.